18 months ago, Bitcoin was 16,000 and everybody thought the crypto economy was going to zero. So it's only really been in the past 6 months. You could even argue 12 weeks. It's really January when the SEC approved the spot ETF that the mainstream consensus in the world was Bitcoin is an asset. It's not going away. I used to say, if it's not going to zero, it's going to 1 million. But there are a lot of people thinking, oh, it's too good to be true. The government will take away from you. It'll be banned. And I think turning the corner was really essential. And the turning of the corner is when people realize it's not a cryptocurrency, it's a digital property. And if it's a digital property, it's a store of value. And I'm going to buy it as a store of value or buy it through the ETF and hold it a long time. And when the SEC approved 10 Bitcoin ETFs, mainstream Wall Street consensus shifted to, okay, it's going to be around, and then opened up an avalanche of enthusiasm. And that kicked us into this Bitcoin gold rush era. For the next 10 years, every quarter, there'll be more enthusiasm, more adoption, more awareness, but it's like year one of Bitcoin as an institutional asset. Companies will do this, but it's hard for them to move that fast. Normally, if something is new for the last 3 years and you're in the 4th year, you're an early adopter. So that's how fast corporations move. So I think it does happen, but I think that we're still very close to the crypto winter. So many bankruptcies, so many meltdowns. We need to get a little bit of distance from that and stabilize. And at that point, more conservative companies will start to move into the space.
If it's not going to zero, it's going to $1 million per coin. When you boil it down, that is the true investment thesis behind Michael Saylor's massive bet on Bitcoin. In his latest interview, Michael Saylor pointed out that the Bitcoin bull run has only just begun, with us only being 12 weeks in since the approval of the spot Bitcoin ETFs in the US. At that point, the mainstream consensus switched from Bitcoin is going to be banned or regulated to Bitcoin is now here to stay. Sophisticated and institutional investors now realize that Bitcoin is digital property and it's the real deal. Saylor argues we have now entered into a 10-year Bitcoin gold rush era in which he foresees an avalanche of institutional capital finding its home in Bitcoin. Make sure to stick around to the end of the video where Saylor breaks down why investors are not too late to Bitcoin, as this is only just the beginning of what's to come. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind. Now here's Saylor with his latest on Bitcoin.
It wasn't clear what's going to happen with every single crypto application or use case everywhere in the world for the past 24 months. So there's a lot of people have been waiting for certain shoes to drop or for certain decisions to be made. I think that what you could say in the middle of 2024 is it's pretty clear in the US capital markets that the regulators have embraced Bitcoin as a commodity, a digital commodity, and the investors have embraced Bitcoin as a digital property or store of value investment. And those two things, there's broad consensus on. And if you're building something based on those two insights, you can build a very, very big business, right? Like MicroStrategy's gone from 600 million enterprise value to 35 billion. You can build something big. But those two insights, they weren't clear 2 years ago. Yeah. I couldn't have said, 10 companies on Wall Street will all agree on that 2 years ago, and the SEC will let you sell that. So I think we're just 12 weeks into the institutional adoption phase, and every day we watch, money flows into the spot Bitcoin ETFs, and you see 50 million, 100 million, 200 million. You can see it's starting to simmer. And I think that will cause people's wheels to turn and they'll start to think about what's the next thing. And I mean, this is how markets work, right? Like markets very confused with 27 different ideas. And then all of a sudden one idea works. Remember like search engines? And there was a bunch and then there was Google.
Exactly.
Remember how about mobile phones? There was a bunch and then there was Apple. There'll be a bunch. Remember mobile apps? There's a bunch, and then there's a few.
We have 5.
Yeah, so I think markets work like that, and then something starts to work, and that gets bigger, and it catches on, and it catches fire, and then people start to copy it, and then it becomes something. And I think we're still early, and that's a good thing, right? Because what that means is there's an opportunity for you.
Yeah, exactly.
Right?
Okay.
You don't want everybody to agree. You want everybody to be confused about things so you can act. Bitcoin is better described as a city in cyberspace. If you imagine a city that's 276 blocks high, 276 blocks wide, 276 blocks deep, that would be about 21 million. And it's a network, a shared network that people all around the world voluntarily enter into, and you can buy one of those blocks, and you can take custody of that block, and you can keep it for 100 years, and you can give it to your children's children's children. So if you think of it as digital property or the greatest city in cyberspace, it's when you move into Manhattan and you tell all your friends to move in Manhattan and they all move to Manhattan because Manhattan's the greatest city in the US and the price of land in Manhattan goes up. That's not a Ponzi scheme.
Yeah, exactly.
That's an example of a place where everybody wants to live because it's the best city to live in North America. And people have been moving to Manhattan for 400 years. And the price of real estate in Manhattan has been going up for 400 years. Imagine a city in cyberspace where 8 billion people want to live. And, they don't live physically, but they live economically. Everybody in the world has a problem. And the problem is they would like to store their capital and preserve their capital. And they'd like for someone not to steal it, right? So they all need this bank in cyberspace where they can store their life savings and know that it will hold its economic value. If God came down from heaven and offered to set up a bank with 21 million coins and keep the money in heaven and let you telepathically zap it back and forth and make sure no one cheated anybody and do that for the next million years, that would be a better bank than any bank we have, and it would be a better currency than we have. But, God's not going to do that. And so the next best thing is if you create a bank based upon cryptography, based upon computer science, and you give a copy of that software to everybody in the world that wants to use it, and then everybody voluntarily buys and sells those units we call Bitcoin and holds them if they wish to hold them. And anybody that tries to cheat the system gets kicked off the network. So Bitcoin is better thought of as a protocol, a fair, equitable protocol for people to trade economic value or store economic value. And it happens that the more people that use the protocol, the more valuable it becomes. Not so different than English, the language. The more people speak English, and the more money the people that speak English have, the more useful it is for you to learn English. And like New York City, the more people that move to New York City with more money doing more things, the more valuable your real estate is in New York City. So it's basically a network. It's the world's greatest monetary network, a digital monetary network. And what's special about it is it's open, permissionless. Nobody owns it. No country controls it. No company controls it. No individual controls it. It is the result of an experiment where the 50 predecessors all failed and thousands of copies failed. And it's the winner in this Darwinian market economy for money. And what you have is a network where hundreds of millions of smart people with money have entrusted hundreds of billions, now $1 trillion or more of money to the network because it's a much more efficient way to do things. And that being the case, it's just the world's first scientifically rational engineering protocol for economics, for economic cooperation,
Yes.
or for monetary interchange. And that's something everybody needs. Nobody can stop, but most people don't understand. And the reason that it makes sense to spend 100 hours studying it right now, and the reason it makes sense to buy Bitcoin is all of my best investment ideas are things nobody could stop, everybody needs, and nobody understands. I think Bitcoin is a brilliant system engineering achievement.
Agreed.
Because it is many, many parts. It has servo mechanisms in it, feedback systems. It has very intricate computer mechanisms and economic mechanisms. But the things that I focus on that are very beautiful to me, one is the idea of creating a crypto commodity. How do you create an asset without an issuer that nobody controls, that is self-sustaining?
Yeah.
And that's a first in human history. That is really a beautiful thing. In theory, you can create other crypto commodities, but it's very hard. And if they're serving as money, you'll tend to have all the money collapse to one. Like,
yes.
If
Exactly.
people use gold, they won't use silver.
Yes.
And so it's definitely the king crypto commodity. The other thing that's really beautiful about it is this brilliant leap from commodity to scarcity. It's the first time in human history that we created a commodity with a hard supply. Every money in history, glass beads and bales of tobacco and stone coins and copper tokens and paper currency and cigarettes and fiat currency, all of those things were uncapped. Every other commodity, soybeans and oil and natural gas and gold and silver, uncapped. We can create more of them. Land, timber, real estate. You can even extract land from the sea. You can create more of it. Bitcoin is the one commodity that you can buy and you can hold where it is absolutely capped 21 million. So if the price goes up by a factor of 100, the supply is invariant. There is no other commodity where the supply is invariant to the demand or to the price. That makes it perfect money. It makes it the best store of value asset. Most other commodities are much worse. If a commodity has a stock to flow ratio of 1 and you produce, twice as much, or the equivalent supply every year, it's not going to be good money. If the stock to flow is 50, it might be better money if you only inflate the supply by 2% a year, like gold. But it's still not great because every 30 years you cut your money in half if you inflate 2% a year. So this leap from the idea that there should be a 2% inflation rate to the idea that there should be a 0% inflation rate, that's a profound idea. Most classically trained economists and all the Keynesians would tell you 2%. 2% is the right number. We want 2% inflation. But 2% gives you a half-life of 30 years. 1%, you get to 72 years. 0%, you live forever. There's a pretty big difference between 0 and 200 basis points. One thing is you live forever, you're immortal. And the other thing is 30-year half-life, So you don't think it's a lot, but it's profound. Do you want a building that will stand forever? Or do you want a building that will crumble in 30 years? And once you start thinking about that, you realize if you build a capital structure of a company or a family or a country on an asset that's crumbling every 30 years, your civilization's going to struggle. Gold's got a half-life of 30 years. The US dollar is inflating about 7 to 8% every year. That gives you a half-life of 10 years. Most currencies inflate at 14% a year. Gives you a half-life of 5 years.
5 years.
And then some currencies inflate and have a half-life of 18 months. And so you start and ask the question, I want to build a government. I want to build a family. I want to build a company. I want to build a nonprofit. I want to build a bank on a capital structure that will last forever, or 30 years, or 10 years, or 2 years.
Yeah.
And so that second idea of scarcity, that's a very brilliant breakthrough. The third idea that's a breakthrough is transactional scarcity, second order scarcity. The fact that there's only one block every 10 minutes, or the fact that there's only 4 megabyte blocks, or there's only 4,000 transactions, maybe 7 transactions a second. A lot of people think that's a bug. That's a feature. That's actually how you enforce security and you create a market economy in transactions. So you won't have first order scarcity if you don't have second order scarcity. So Satoshi was smart enough to realize that you just can't move the Bitcoin around every second because the security will collapse and the stability of the network will collapse. And I think that was very brilliant. And the last brilliancy is the use of proof of work and SHA-256 hashing, and not crippling it by saying we're not going to allow you to do ASICs. Because there's a point where some people said, we don't want you to do ASICs, that's cheating.
Yeah.
And there's but with Bitcoin, they let you build an ASIC to generate 256 hashes. And the right answer is to be able to do ASICs, because an ASIC is a silicon machine with a 2,000 to 1 mechanical advantage over a CPU. And that means that you can put $20 billion of capital in the Bitcoin network and defend it with a 2,000 to 1 advantage against all of the Google and the Apple and the Amazon and the Microsoft networks. So you see, if you didn't have the ASIC, then you would have to spend as much on CPUs as they. And so a big company could overwhelm the system and destabilize it. But because we have a very particular proprietary protocol, or SHA-256, a special protocol, and because you can create a very efficient Bitcoin miner, it means that you can constantly upgrade the energy efficiency and the thermodynamic efficiency of that equipment. And that means that whoever controls all the Bitcoin mining equipment can defend the network. And that is profoundly important, because that opens the door to defend $100 trillion of assets with only $10 or $20 billion of hardware. Right? And that's a pretty big idea, right? A silicon machine for security. The other implication is, when I spend 20 or 30 billion on hardware, the only thing you can do is defend the network. And so if you go bankrupt and someone seizes your equipment, they have to defend the network, right? So the only thing you're ever going to do with Bitcoin mining is to defend the network and secure the network. And that's a very useful feature of the network, because naturally what it means is the network has a 12-year security frequency. When it becomes non-profitable to mine Bitcoin, it'll still run for 12 more years.
Yeah.
Because the equipment is already sunk cost and you can't do anything else with it. And naturally, what happens is once you've invested to know how to build a Bitcoin miner, then you'll keep producing Bitcoin mining equipment even at a 5% variable margin. So you'd sell the first machine for $10,000. You'll sell the next machine for $1,500.
Yeah.
You'll sell the next machine for $800 plus $50. So you're going to keep shipping security equipment, even if the price collapses, even if the profitability collapses. And that's kind of ratcheting effect that you want if you want to defend all the world's money.
So there's Michael Saylor's latest insights on Bitcoin's bright future over the course of 2024. Remember, according to Saylor, we're only at the beginning of what could be a decade-long gold rush in the digital currency space. The key takeaway? It's not too late to consider Bitcoin as a serious investment. As Saylor emphasized, the avalanche of institutional capital into Bitcoin is just starting to gain momentum. Before you go, let me remind you once again, if you haven't already, hit that subscribe button, join our community for more expert analysis and the latest updates in finance. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.